Okay, I'm ready to roll whenever.
What are we talking about?
There's tons, the report, and then what it means in this time of year. What can you do? And then cash guys versus guys that do stuff here. You know what I mean? Like, what do we do here, and why is it different than the cash market? What you can expect in the cash market. And then, of course, cattle and the rest of it for sure. So...
Welcome to Hedge Heads, where hosts John Prischman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, welcome back to another episode here, and it happens to be report day, the quarterly report, June 30th, and I looked at the numbers just now, and it appears there was not a report today. Did something happen? People didn't read it?
They nailed the numbers. I mean, it's a report known for a wide range of guesses. Landed almost exactly a bullseye in every category. I don't know that there's a surprise that we need to go over. So what does this mean is a better question.
Yeah. What does this mean?
So I've been holding back hedge ideas and things that we're going to do. And all day tomorrow and the next day, I'll be on the phone. And this is the report you have to wait for, because fundamentally things can shift really fast here. You go back a couple years ago, they cut all those bean acres, added to corn acres, made beans wildly bullish versus corn. And this year, there was a chance there wasn't as many acres as they thought. The weather was pretty good. Some guys thought there was going to be more. Yeah. Some guys thought there were going to be a little less. The beans, I think, is an interesting number. It's still an interesting 83 million is the lowest acreage basically with good weather. Meaning, like in 2019, he had really poor weather. He had a very similar number. This is the first number at 83 that they had the choice, and they planted the fewest acres since 2015. But at 19 with all those prevent plant acres, and I think 20 had a rough planting for soybeans. So soybeans are the bull of the bunch, but there's plenty of beans around right now. There's certainly plenty of soy meal. I mean, soy meal goes down every single day. Go look at a monthly chart on soy meal. Go look at a daily. Go look at anything. Ugly, beyond ugly. The spreads are record lows, like take August versus March, October versus March. You've never seen anything like the sell-off in meal that we've seen in spreads, in the outright price. You're going to have cheap feed. That's not bullish for corn. You already had cheap feed. You have good rains. You're going to have hay. Money's going to be tighter, so it's going to be harder to store it longer. Like, there's not a lot of bullish things happening after this report today. So it confirmed a lot of acres for corn. The one good thing is we should see wonderful demand. But the bad news is that's already in the numbers. We're like really good demand. So back and forth we go. But so what's going to happen here is this is the report that separates the cash guys, the guys that just farm, store it, and then hope for a better price, versus guys that do stuff here. I'm not saying we have all the answers, but
when you say here, you're talking about on the commodity market.
Yeah, Blue Creek Commodities, the commodity brokerage. So we're going to be doing stuff on paper here. I'm going to tell you none of what we're doing because I can't. But just know this is where the two roads separate. I hope something happens where it goes up versus guys that are proactive. And I'm not saying there's a lot of stuff to do. What I'm saying is that there's definitely stuff left over. There's still inversions in the back end. You were talking 26 things in 26. We're looking at that. So we're looking forward, being positive. You're going to have to deal with the numbers that we have. And then you got the cash guys, which I would say is a majority of the people are going to not like what they see probably coming. You're going to glom onto ideas like we still have 3.6 million acres of corn to plant, and somehow it's going to get bullish. If that indeed is true and that doesn't get planted, or when's that number coming out? Next January, next March. I'm
getting excited for heat unit talk. Can we talk heat units?
Come and gone.
No, let's talk heat units.
Very rare that a summer doesn't have that, and it's going to get hot. It's been 86, 87, stuff shooting up like a missile. You don't see much on Twitter about poor conditions. No, I don't mean to make light of it. You're going to have every year some farms that are in dire need of rain. There's going to be farms with too much rain. Overall, you're looking at a wonderful crop, even though people will deny it. We've had a lot of different weather looks over the number of years. What was a good to excellent was 73%. That just came out. We're climbing into July. That's exceedingly rare as well. Beans were 66, so they stayed the same. But what you don't normally see is rain and improving conditions with a great forecast for the rest of July. Bam Weather on Twitter is a hot and dry pattern setting up for the rest of July. But every day that passes,
it's going to get hot in July.
Yeah, exactly. Well, the heat dome of death is more and more unlikely to happen. Now, if it does happen, soybeans are your market. So, that, if you're looking at the long side and you're looking at weather, clearly soybeans, frost, you throw that out there. But don't make excuses. Actually ask, look for ways. You don't want to get yourself overextended at, what could be near bottoms either. But ask yourself if the funds are pressing, it's worked, seasonally it works, and they're continuing to do that. What is likely to happen? Are they likely to stop doing that now with no news but bad news, or are they likely to continue to do that? And I would start there and be truthful about where this could go. You're going to hear what you want to hear. You're going to hear it's going to go up, but today was really the last day, at least for 6 weeks, where short of a huge weather shift, where are you getting your bull news? We have great demand. They have great demand factored in. But so there is a number of things we're doing, and you're more than willing, or you can call anytime you want. I'll go over each individual thing. Our job is to get ideas out in front of you. So Ryan will be working on stuff. I will. This is the report we had to wait for. And now it's out, and now it's time to go to work. Albeit these aren't great markets, and it's not like if you don't call, you're missing out on these wonderful opportunities. But you at least should look at it or learn about it. What can you do this time of year? Is there anything? Before with the weather, we talked about this a lot, is like there was so little for so much risk. Now it's getting to be closer to the finish line, so we need to be looking at things even if there is some risk. Generally, like the call premium's not very good, stuff like that. But again, if you dig through the rubble here, today there wasn't much of a reaction. There's generally things left over to do, and that's what we're going to be concentrating on, and also already working on 26 for beans and corn. That's the time of year to look at this. And again, you don't want to overcommit yourself to anything, but my point is don't give up. There's actually things to do. And you're going to say what? And that's what we're for.
Let's look at a couple ideas though. Like what are you looking at?
Well, you got short calls, long puts, you got short-term puts, you have inversions in the back end, you have next year's December it's not over 27. You have inversions in the next crop year. And then you like I say, you just a number of option ideas that you can get implemented. One of the main problems is, and it's been this way, there's not a lot of meat on the bone.
Right.
But there still is some. You look at the carry in the market, which we've talked about. Can I use a carry? Is there anything that I can do there with my storage and futures, or my storage and options? The combinations are going to be different for everybody. That's also another thing why I'm not a big newsletter guy. Everybody's going to have different situations for different needs and different storage plans. But don't expect everybody to store it and ignore it. The money's tighter than it's been in a while. It's probably going to come out. I just had a call today, and this is a perfect example. I had a guy call. Should I take 30 under basis? I can't remember if it was March or May delivery. And I think it was March. And he's just asking, should I take basis? We didn't do anything here. He's just simply asking a cash basis question. The same guy asked this last year at this exact time, and it was 25 cents, and he took it. And it was, in Minnesota, that was a very good decision. So these are the kinds of things I'm talking about. It's not all here or all on paper. Some of it's just deciding on basis, on cash levels, but then each region is going to be different. So it's not like you can throw a basis recommendation for that guy that called that's from Minnesota to a guy that's maybe in Illinois. It's going to be a completely different idea. But what I've been rambling about is that you shouldn't give up on this, and there's still things to look at yet. And then you fall another 25, 30 cents, and then all of a sudden there is nothing to look at. And then you are going to store it and hope. I suppose a lot of guys are going to be out there surfing, looking for cracks in the armor, why corn has to go up. Like I said, on Twitter already, you're seeing a lot of, this is 100% good to excellent, a lot of bitterness, I guess we're going to plant it for nothing. It is what it is. I would accept reality, and hopefully something does change. Hopefully you can have some ideas that leave the upside open. But what you don't want to do is burn a bunch of capital on a bunch of short-term trades, like, try to make a pile in options at these levels, because, it's really low already. But still, you want to be planning. So I think general outline. You want to hear general outline, Ryan?
Well, that's why I'm here.
Okay. Yeah. I think corn has a lot of acres this year. And you have that 470 guarantee, for a lot of people, and some guys are covered very well. That'll be a lifeline here, and the corn's going to be a big crop. There's a lot of guys are going to store it, but I think the price action is probably going to really throw it out of favor for next year. And the beans actually have a chance to rally into spring. Mm-hmm. You throw a couple more things at beans with this amount of acres, and it actually can get really bullish. Hard for that to happen until the weather shifts a little bit. But that could pull corn up, and that's going to be attractive for next year. Costs are going to be high, and I think the banker's going to be leaning beans. So I'll be looking for a good spot for November beans if there's a run-up in beans for next year. So I'm not worried about 25 even right now. I hope that goes up. It looks like it's got fundamentals to go up over longer term. But then you're going to use that to piggyback November 26 and try to get something locked in there decent. Now, don't lock in 10.20 or whatever it is. But let's say you get that quick rally up to 12.50, something like that. Then start planning ahead for next year and try to break that cycle of storing it and hoping. Because, 3 years in a row now? That absolutely has not worked in corn.
Right. And that was something I was going to bring up too, is this time of year especially after this report, I know there was a lot of hope for some bullish reaction.
Yeah, there was
hope. We can be sitting on bushels that are unpriced, or we can be holding out hope for stuff in the bin. And or not even that, maybe it's just what you have marketed and not marketed. It's easy to let emotion play into these decisions, right? Yep. And it's easy to get emotional about what's happening, and that's where I think, like you're talking about, planning in 26 already, looking at some of that stuff, knowing that there is, there are opportunities to do some things. It might not be what you have right now, but that there are things to do, and if you just throw in the towel, it's not. You don't need to, I guess is what I'm saying.
Yeah, it's not the time of year to throw in the towel. This is not normally when you would find a low. If it was a really bearish report, you could get a spike low. You do get reversals sometimes after this report, but generally you're going to find your low in July and September more often than not. Sometimes you get a low then, and then it makes a new low before the end of the year into December. But more often than not, mid-late summer. You can't say the crop's made either, but I mean, look at the weather forecast and look what's happening. So let's say the crop conditions drop next week, which they might not even. It's like we're 73 and we go up another week, and then what are you hoping for? Frost, pretty much at that point for corn specifically. Yeah. Now beans, on the other hand, you got to watch that weather all the way through August. The beans could dry down and be not 52.5, where the corn has a lot of subsoil moisture, or a lot in a lot of areas. It rains nearly every day here,
right?
And so today even. It seems like you talk to guys on the phone. I ask them what they think, and they're pretty confident it's got enough to go through pollination, and there's not threatening weather. So it's like, well, do the math. But this is not a time of year to give up on it. It might seem like a too low of a price under the cost of production, but I'm telling you, there's things that you can do, whether you're buying some sort of cheap call. and then shorting December 26th on hedge to arrives, or shorting December 26th on hedge to arrives and trying to sell some premium while it's safer with the weather. There's still combinations to do, or at least you should look at. And then there's stuff to avoid too. Like, you don't want to get heavily short at a time of year when lows normally come in. But again, we're not seasonally there. And you look at the carry in the market, you're 441.5. The main argument for corn, though, is still going to be it's 1.8 and it's got to be 181. But the trade doesn't believe that.
Right.
They haven't believed that for a while. The spreads haven't said that that's true either. The cash market hasn't said that's true. And I'm not saying avoid the USDA's numbers, but if you took the USDA's numbers at face value, corn would be bottoming here for sure. And the funds don't believe it. They haven't believed it. And what's stopping them from pressing it? I'm hoping when the calendar turns over tomorrow, July, that there's a little different feel to it. The U.S. dollar, though, that's something you got to keep your eye on.
I think the two things. One, the dollar is extremely important, but I think even more important than the funds is the cash. And the cash is not showing. No. To me, you're going to have to see something in cash first, and that's going to scare the funds out.
Yep.
And we haven't seen that.
Yeah, that's where I would look towards the cash
markets. If these numbers were right all spring, as far as the USDA numbers, the cash normally would look way different than it does right now, and it doesn't. So what's going on?
Yeah, it's the numbers don't match up with what the basis is. There's some theories on Twitter that you're seeing. It's just
there's always theories.
The way that they market in the fourth quarter is causing the spreads to collapse. The last 2 years it seemed like they held very tight to the corn, and it was wrong going into July. This year, it sounded like guys were selling off the combine during, going into February, into the rally, and they were selling, big chunks the whole long way. The problem is the chunks just keep coming out of the bins. Then you see the blown over bins in North Dakota, and I think there's some in Minnesota now, and they're all empty. And they're like, oh, this is 2020 all over again. And the cash market wasn't as bad in 2020. Like, it was noticeably good basis after 2019 for very good reason. The corn genuinely wasn't out there. A lot of bins will be empty or emptier this time of year. That's not uncommon. The theory that all bins are empty, I think, is a little thin. I'm hearing guys on the phone today, like, what should I do with my old crop corn? Heard that 3 times a day. But I don't think they've held as much as they've held the last few years. I still don't look at, like you said, who's bidding for cash, who's worried about coverage for the summer. If you looked at the 1.3, these guys should really be looking for corn already. That hasn't even really begun.
I know who's looking for corn.
Who's that?
The cattle guys.
I got a guy that's going to buy some cattle. He's getting back into the cattle business for the sole reason he thinks is going to be an absorbent amount of cheap feed around for this in this area. I would be surprised if there wasn't. So he wants to hop on that cattle train, but he also wants to look at puts because buying cattle up here is dangerous.
Right. Well, if you buy the cattle and you buy the puts, as long as that factors into your plan.
Yeah, and the numbers work. You can't, and that's difficult. But if it works for you and you have the way your feed's set up and you can make the numbers work, that's what you need to do. Cattle's a market we haven't even talked about, but cash is coming down. Yep. So the $1 million question is, what are the speculators going to do? They've been long for 2 years now, loaded to the gills long. We've come up 2 nice days. We've gotten closer to cash. Now one could say, I think June went off the board at 225 something, and August, where are we sitting in August? So August is at 213.97, call it 214. You're officially $11 off where the June went off the board, so we're not crazy out of whack with a declining cash market anymore. The $11 basis. And so what does that mean? It could go either direction just because of that basis gap. But the whole it's way underpriced anymore is starting to narrow up every single day. And now you're going to need to see cash go up to get futures to go up. If cash continue to go down, it's going to be hard for futures to really climb. But if cash were to go up, then futures would climb fast. So that's the $1 million question. The funds have got out of very little, even with that break that we've just seen. So they're probably wondering what to do. We're wondering what they're going to do. And it's probably become a very dangerous market with the idea if they liquidate that, you're going to see a sizable correction here, but you still can't rule out that old bull. I mean, it is around. The cash market's on fire in the sale barns. They'll pay anything. I mean, I don't really gauge anything on that because you get that bidding going in the sale barn, competition takes over, and you get LRP and that free money in their mind. I think it's going to end poorly.
That is one of our sayings.
Yeah.
Don't underestimate a rancher with a checkbook.
Yeah, it gets to be competitive, and there's not a lot of cattle around. And buying them's been working really well.
It has worked great.
Yeah. So, and then it looks like the feed's not going to be expensive after today's report. So you got a lot of reasons why it's the way it is. What I'm saying is don't use that as your hallmark for what reality is going to be on the live cattle side of stuff and the demand side of stuff. They'll pay what they need to pay in the sale barns until it looks like a really bad idea to do it and it's financially so painful that you don't. That's how that market corrects. So in other words, it's ugly and fast, but not too many cattle around. Doesn't look like there's going to be too many cattle around anytime soon. So you have a solid market, but definitely cracks in the armor. Demands is what's been driving it, and that's not lightened up too much. So I'd say neutral. I call it a neutral signal on cattle. Hogs might have topped out there. They got out to those numbers that they have been out to before. And seasonally, it wouldn't surprise me, but that's been a solid market. And what's going to be the overall view? Now you got guys talking about they're going to shift money out of the stock market into the super undervalued commodity market. Is that going to happen, Ryan?
The super undervalued commodity market.
I think they're mistaken with super undervalued versus what it costs to plant.
Yeah, I would agree with that. I mean, are they going to shift out of the stock market into commodity? I talk to more and more people that are interested in doing something, and lately especially, so I've had some of the Bitcoin bros giving me a call and saying, "What can I do?" You know, I look at what are the possibility. I'm not saying you should consider this. This is what I've heard from multiple people.
Bitcoin
what are the possible? Yes, Bitcoin people. Okay. Keep in mind.
Yep.
One of you, I know you are listening, but they say, what are the chances of Bitcoin 4xing over the next year or 2 years? Slim, right?
Not according to Michael Saylor.
Okay, well,
micro strategies.
4x. You'd make your judgment. Will Bitcoin 4x in the next year, or what else could? If you're looking and if you want to put it in something real, what could 4x in the next year?
Well, part of it's going to come down to interest rates, which they're currently fighting over daily.
That was going to be my next topic, actually, was I thought the interest rates were interesting today.
Yeah, they're trying to get them down. I think by they, you know who I mean. And then they're a little resistant. I'm in the camp that nothing's getting cheaper that I've seen at all. And I'm not cheering for inflation. I'm a realist.
Corn's cheaper.
Corn, yeah. The commodities. And that is the argument that why is everything else going up but what the producers are producing? And I don't have a good answer for that. It's just what's happening. Commodities are usually the first to get hit. The housing market gets soft. Lumber is going to lead the way down. Copper is going to, you know what I mean? The commodities are known for being underpriced. I think with the inflation that everybody else is happening for everybody, they get to raise their costs. Why can't producers? It doesn't quite work that way because you produce it. People don't need to buy it, but you need to produce it. So it's not fair and it's not a fun game. But companies simply don't need to buy what you produce, but you do need to produce it to make income. So that's where commodity people always are. But in the boom cycles, you're laughing like the cattle guys. You know, you treat the producers bad for years and they get out of the business. then it's going to punish and the Packers are, because of their greediness over years and taking all the margin, it produces cattle market, and now they lose a lot of money. And that's just the way the world works. But the worst part is, eventually, when they're losing money as Packers, they'll just walk away and take the ball and go home. They don't have to buy what you produce, and that is always the problem with commodity producers. Very important. I'm not downplaying the importance. The commodity markets are super important. I just think guys are struggling with the input costs and really getting frustrated with the price. And unfortunately, commodities just don't work like that. It will come into balance. So in other words, if it's too expensive to plant corn, that's why I'm already talking about November 26 beans. You have to be ahead with the trends. And if this is going to be this way, well, that's going to happen to that market. And that's what I'm trying to do with grains. Was so unattractive to raise it. You simply either don't raise it, don't fertilize it, don't have as good of yields. It will come into equilibrium, but the problem is getting to equilibriums where the losses are and the hard feelings are. And it feels like that's where we're at in grains right now. I'm hoping for the bull story in beans to break through somehow and pull everything up and at least be manageable.
Yeah. I mean, can we jump back where we started this line of thought, though? What are your thoughts on interest rates? Because they were, even the 10-year was down a little today.
Just watching the fight. I think that the jobs market's cooling, and you talked about this early. Like, it's definitely harder to find jobs than a year and a half, 2 years ago. You can say what you want, but that's the truth. And that ultimately would lead to less people spending, and that in turn would bring down inflation. And I think that's how you get to lower rates.
The two things I see, at least in our area, right? You never want to assign what you see in your backyard to across the country. But it appears the job market is much softer as far as job searchers. I can find people to do some work now where I couldn't have 2 years ago.
Yeah.
And I also see less people out recreating. When whether it's been camping, whether it's been out mountain biking, whether it's been out fishing, I'm seeing way less people out there than I have 2 or 3 years ago.
Way less. That's one thing. We're on lakes. We're in a lakes region where there's more lakes in this county than anywhere else in the U.S. And we're going to be at ground zero for lake recreation, fishing and boating, skiing, tubing, giant wake boats. It's all here. There's so many lakes. I mean, I don't even know some of the lakes. I've never been on some of the lakes here, and I go on the lakes all the time. There's how many lakes there is around here. But it is very noticeable. Even fishing yesterday, I was out in a lake called Ottertail. It's a big lake, 11,000 acres for here, and normally you'd see the wake boats and the music's blaring. Granted, I'm more towards the center of the lake, but still, you're just 2 years ago, like you're saying, completely different look. Whether it's people that were working from home, just a lot more free time and being here. It feels like people are back to the office because they want to keep their jobs, and they're working more to pay for the inflation and just getting ground down by the expenses. You can just get a feel for it. Fishing, you had to get up at the crack of dawn to get a parking space where there's 50 spaces to park. I pull in there at 9 o'clock. No problem. 2 or 3 guys there on the lake. This is very different than we've seen in the past. And I think recreational stuff's one of the first things you cut out when things are getting tighter. So it does look like it's happening to me.
Yeah, I see those things, and I also know that in general, if we're just talking the front end, right, the Fed is usually slow on both sides. They're slow to raise rates. They're slow to cut rates.
And they seem to be fighting with the current president, too.
Yeah.
Or they don't seem to like each other. Not that they should, but...
But I also see a McDonald's hamburger is like $6. So, like, the McChicken's not on the dollar menu anymore.
The only thing that's coming off, which is one of the most important things for inflation, is oil. But then it's also kind of just settled back up to, 65?
Yeah.
So I wouldn't call that cheap, and I wouldn't call it expensive. So I don't think inflation's coming down till oil comes down. At the very least, that would be my gauge. It's stagflation is what you have, really. There's no growth that we're seeing. The stock market keeps going up, but things keep rising. Nothing in the grocery store is going down that I've seen.
The stock market's not the economy, John.
It's for rich people who golf. And
right.
I wish it was for me. Like, I took the high road in 08. I'm like, whole thing's melting down. These guys are nuts for owning stocks.
Yeah.
And no, you should own stocks since 2008. That was the answer.
Yep.
It was, and it isn't the economy, but things are slowing down, and interest rates are more likely to go down than up. That's what I would think.
Yep.
But who knows? I mean, it's
we
kind
won't know. We won't know till it happens.
It's a tiff. They want to replace Powell with somebody that's going to lower rates. I'm not sure they can do that, but if they do, I mean, I would think commodities would have a bid under it, and the U.S. dollar. We talked about a little bit. That's the one bright spot for grains. You should expect very good demand, especially at these levels. Yes, the USDA has that in their numbers.
What is the dollar at now?
It was 97, but did it go down? It went down another 50 cents today. So what was it, 96.40? Lowest it's been in a long time.
That's making a big difference for sure.
Yeah, and we were 103, 107 throughout last year, and you saw the demand we have.
Yeah, the last few years it's been bouncing between those.
So a lot of guys are going to put their corn in storage and hope, and this is what you're hoping for right here: the dollar and the demand to bail out probably what's going to be a very large crop. That's where you're putting your chips in, that the dollar is going to be the story this year. Commodities are going to look too cheap and we're going to rise. That's why when we were talking earlier, there's stuff to do. You need to know the time frames to do it, because not too long from now, you don't want to be short if you look at the seasonals, and it can be very painful if you stay short too long. So there's quite the dance this time of year. My point earlier was usually the lows don't come in June. Yeah. It's very unusual when that would happen.
Yeah.
But not too long from now, it is common for that to be, at lows.
It's very interesting to me just to see what would happen if interest rates do come off. I
think the metals will go up, gold and silver. I think that you would these mics pick up everything, so yeah. That would be after I drank a lot of water. The sounds that you would hear. So I think interest rates would make all the commodities, if they were to lower them, I think that would be the green light to buy commodities and buy the metals. They already want to buy them with higher interest rates. I'm kind of on the Fed with this one, that it doesn't look like it's contained. I mean, they are aggressively buying stuff that doesn't yield anything. And the reason they buy it, instead of getting a 5% yield on their money, they'd rather own gold, because they think it's going to appreciate a lot because they're spending too much on the debt, and they don't think 5% is enough. So their bet is that inflation's still there. And until you see metal softening up and commodities as a whole softening up on poor demand, I don't think that you can that inflation is tamed at all. I mean, I think, like I say, you got stagflation. You just have more inflation with zero growth in wages or anything else. So that's the bad news. But it'll affect farms a lot this year. You're not able to store grains longer as long as you normally would be. It's very expensive to store grains. That's math you need to do.
Your operating notes get very expensive.
Yeah, and then when you're more knowledgeable about this, like, does it make sense to sell my corn now or lock in basis like that guy did? And then instead of storing it, buy just calls? Is that going to save me a ton on interest? So people think that you just go long or short here. That's not at all what we do. We definitely talk about what we're talking about now. Instead of paying a bunch on interest, is there a better way to have these bushels, and can I own it on paper and do the math that way? And I would say the calls are very cheap to do that. So that's something one could consider this year. Instead of storing it and pay all that interest, is there a way that I can make that cheaper, because it'll add up really quick? What's an operating note at right now? 9-10%?
I would probably 8. I mean, if you got it today, it's probably 8. But yeah, I mean, anywhere between 7 and 10, depending on your bank and what you're doing, and that's expensive. I mean,
yeah.
Historically, it's not probably expensive money, but that's expensive money when you're talking operating.
Yep.
And I mean, neither you or I operate a farm, right? So related to maybe people who aren't out there, but I just looked at a different house not that long ago. Exact same purchase price as the one I'm in right now.
Yeah.
Right? But buying it today with 20% down versus buying it 8 years ago with 20% down is more than double in the mortgage payment.
Yeah. And that's why no one's moving. And I'm with the guy that, I don't know who was saying this. He thinks when rates go down that there's going to be tons of inventory and houses are going to get it cheaper. Before they thought, because the demand was so high, there's so many people on the sidelines waiting for lower interest rate that they rent, they don't have homes, that it's going to explode when it goes down. But I still think, like me even, our kids have grown up. We still have one in high school, but he's not, after next year, he won't be. You get trapped in these lower mortgages, and we'd like to move into a smaller house, and you can't because of what you were just saying. You get less of a house, the payments probably more. You could use the equity out of your sale. I'm sure you have equity in your house, and then pay it down. But what is going to happen is I think that people will move really quick when they can, and it gets to be an affordable rate. So that might drive housing prices down instead of up. But it's just kind of a unique situation we've never seen. All I know is, though, the higher interest rates, where we started talking about, definitely loosens the grain up from the countryside. So holding it to glory this year is going to be tougher if the interest rates stay high.
Yeah. And there's options. I think, to your point, what you were talking about, what we do here, there's options to not hold your grain where you can still have the benefit, and doing the math and figuring out what makes sense.
Yep.
Is the way to do it. And maybe it is holding it, and it is taking advantage of the basis and taking advantage of the spreads. And maybe it does make sense to hold it, or it's selling calls, whatever it is when you're holding.
Yeah, let's go over specific numbers. I mean, we'll do exactly what we would normally do at work here. So a guy doesn't have maybe storage for 20,000 bushels, or he doesn't want to store it. So let's look at, what is that, 5 cents storage at an elevator, just generically a month.
That's what it's been here locally.
So you put it in storage and you pay 5 cents a month. Let's say you're gonna you plan on storing it to March. So do the math there. How many cents would that be? I'm making Ryan do it.
I don't do public math, but let's call it 40 cents.
Yes.
8-9 months.
So we'll what can you get for 40 cents on a call? The price for that is $4.41 and a half. Call it $4.40. Those calls are going for 25 and a half cents, right? Or let's call it 25.
So almost exactly what storage. No,
so you got 5 months.
What storage is?
Yeah, so you got 5 months starting in like October. So you got November, December. Do the math. It's certainly more than 25 cents. Some years it's not. Sometimes the options are, but what's the benefit? Well, let's go over the drawbacks and benefits. Drawback would be you're going to realize, your money in this taxable year. Like if you don't need more income, which is not a huge problem right now.
Right.
But that would be one thing. Another would be basis improvement. That's what you store your grains for. Price appreciation, basis appreciation. And if it's really wide right now and you don't have a chance, but like that guy called today, he had a chance. He had 30 under. It's unlikely to get a lot better than that unless something happens. And then he would have the choice, instead of storing it, to buy this option. Now, why is it good? Because you get cash in hand from selling your corn, and then you're able to re-own it. But if it goes down, here's the best part. If you were in storage, if it goes down, you lose that money.
Yeah.
Like if your option goes down, what you bought for 25 cents might be worth 13. Let's say we drop 35, 40 cents. You're going to lose 40 cents on your stored corn, where your option, you're going to lose 12 cents. You don't have margin calls. So it's a lot cheaper. And then we didn't even get into the physicality of storing grain. Is it perfect every day and it's just dry and you just, whenever you want to sell it, you go out there? No, it takes work. You constantly work on your storage, whether you're rotating it, whether you're trucking it. Logistically, it's not like you can sell everything off the combine and just get rid of it all in one day. So I'm not saying that. What I'm saying is time is money, and you spend a lot of time on storage and money. It's not free. Fans, everything runs on electricity, and you're going to get some that'll go bad, and then you're going to lose that. So it's not free to store it either at all. And if you finance your bins, you're paying for that. So you just want to compare and make better decisions. Sometimes the calls look horrible. Volatility is high and it's sort of bullish and it looks like storing it looks like a good idea. Does it look like a great idea right now? No, but that can change. So these are things to consider now for later. When you have to make the decisions instead of learning about it when you have to make critical decisions that could change everything. Or if you sold bushels and you didn't have a choice, you don't have enough storage, should I re-own a call going into springtime and do the numbers there?
I want to bring in one other point too. If you're storing it and you need your operating note to buy gas or buy clothes or buy dinner or buy,
Pizza Ranch.
Cheap Pizza Ranch. Yeah, absolutely. And hopefully you're not that's not there, but you would have cash by selling your grain, right? And
yes.
You're using that cash to buy the call. You're not paying the interest from your note on some of those things.
Yeah. Yep. So you just simply want to do the math. There's a lot of good tools out there and start plugging numbers in and try to make better decisions because that'll separate the men from the boys here. The guys that just quit and say it's all rigged and it's not going to be 181 and are just cash guys are probably going to struggle in these markets. Not that I have it all figured out and we're going to be killing it on the other side, but you'd be surprised at the different things that you could look at. And my point is get more ideas in front of yourself and decide for yourself what suits you, what is going to work for you. Maybe choose, maybe get 3 ideas in front of you, maybe choose none of them, but at least get more educated on what are some possibilities that I could even look at. And we'd be more than happy to talk to anybody that wants to talk about it. And sometimes there's nothing to do. And that's kind of been the summer so far. Like we haven't seen these reports. We haven't seen enough weather. Now we have seen the report. Now we've seen a lot of the weather. And I would get going on making some decisions. And it doesn't all happen here by any stretch. Sometimes it's all physically on the farm. Sometimes it's contracting. One guy had a useful tool in Ohio. Every elevator is different. They have different programs, but he's getting 443, although they charged him 4 cents. He's going to listen. I didn't like that. And he didn't like that. He was able to get 443, for some of this old crop stuff. And the price is nowhere near that. So check with the programs at your elevator and get familiar with that stuff. Knowing what tools to use when markets get tough is where you're going to do better than other guys. You'll do some here. You'll do some at, maybe the elevator. You'll do some on the cash market. Mix it up. Do different months, plan to market small increments along the way instead of just big bulk batches in case something changes. Go to all paper where you get the money in hand, pay down that note, and then re-own it via calls. But my point is just have a plan of some sort. Don't just put it away and hope something changes. That can work. It doesn't seem like the corn doesn't seem like that market this year yet. But we'll see. I am hopeful on beans. We don't talk enough about beans. That's something
That's because there wasn't hope at the beginning of the year even.
What I don't like is we're counting on ultra low acres that are unlikely to happen again. It isn't on this demand and this growth. I mean, the idea that there's going to be this biofuel growth there is good, but it isn't really on the back of demand like it used to be in beans. And that is the bad part. It's just simply very low acreage.
Yeah.
We have decent demand, but you could set your watch by, you go back 5-6 years ago, it was going to tighten up. And if they said it was going to get tightened in the spring, it was going to tighten up and then some. And we haven't seen that in years. I mean, when's the last time we've been tight in spring?
Yeah. I can't even remember. So
it's been a while.
2020.
A couple years ago, it was going to be the tightest ever in the spring, and I had bull spread some May and July, like a harmless spread. That thing went to max carry and stayed there, ruined my Vegas trip. Just watching it, just ticking down $0.25 every day for no reason. And that's kind of the year that I've given up on it getting tight. Markets are changing, things are shifting. None of it's good. I mean, we're not seeing like a positive direction in U.S. grains. But I still am in the camp. You don't give up and roll over and get mad. You try to figure out, is there something I can do about it?
Yeah. Well, we better wrap up the show here, John. I know I've heard both our phones dinging, so even though the markets are closed, people still want to chat.
Yeah, we probably lost them 20 minutes ago.
Well, why don't you leave your number in case they're still listening and want to know how to do some of this stuff?
Yeah, if you just want to chat about anything, 218-731-1578.
Thanks, John.
Yep. I just love how they're making fun of the good till excellent category. I love how they're saying there's 3.6 million acres of corn. It's like, when are any of these numbers going to show up, that you're magically putting out there that may or may not be true? It's like they're really grasping at straws that are very thin this year.